Hey folks, Gary Dean here with Sentiment Timing, and this is our technical video report for Sunday, May 17th, 2026. Hope you guys are having a fantastic weekend, and let's get started. So Friday, we saw sellers step in, and really it was the first day that we've seen the S&P down over 1% in quite some time, and it was long overdue. The question is right now, is it just a one-day drop, or are we going to continue to see a proper retracement that I've been referring to, where we're going to see the S&P shed 300-400 points off, which would be normal. It's not. I'm not looking at a bear market. We're just due for a correction, or really digesting the move that we made off of the April lows. So here you can see, using the anchor here and the anchor up here, that we're running right into our primary accumulation zone. And if the bears can get through this area, then what we're looking at is we're going to look at a move coming somewhere down into the 735.90, which also matches this support as well as our secondary. Now, if they push through that, that's where we're going to start looking at price support, which is going to be anywhere down at the 731.50 all the way down to the 729.68. Now, the one thing that I'm noticing is that even on this drop on Friday, we really didn't see a whole lot of buying going on. Typically, we see the institutions that will start distributing on the way up and then buying on the way down, like we did here. But right now, there's really no, we didn't see any buying going on at all on Friday. And we look like we're trading within this bear flag. And if that's the case, then what I would be looking for is a move to come somewhere down, like I said, into the 732 level, all the way down to the 729.85. So you can see we're actually, the heavy indicator here is in a buy. So we're pretty oversold right now. Now, again, that doesn't mean that we have to turn. It just means that we're at levels that it's the S&P is pretty oversold. So if we take a look at a 5-minute chart on the spiders here, what we're going to see, this is really what is the bulls are going to have to get above, and that's going to be our primary distribution zone that is running from the 743.80, the 745.22, and then up at the 747.11. Now, that would also fill this gap right here, so there's a pretty good chance that once we make the bottom, we probably will come up and close this gap, but there's still plenty of gaps below there that the bears would probably shoot to try and close. So I don't know. These will get closed. It's just a matter of when would it start. Is it going to be at levels much further below, or are we going to try to do that on Monday? So let's take a look at an hourly chart, see if that's telling us anything here. And again, really the main thing is that we've we're seeing the some selling that was with some selling that was up here, and we ran it right at the 200-day moving average that's on the hourly chart. So again, if that gets taken out, what we're really looking at is a move that's going to come down to that 731.98 level, and you can see this is our larger primary accumulation zone that's down at the 725.70 down to the 720. But I'm going to measure that up again. Actually, I'm going to move this to a 4-hour chart. Okay, so on a 4-hour chart, this is really going to be the proper, say, backing and filling, or really just a digestion of this move that we've seen since April, because this has been a massive move, and there's really been no type pullbacks at all. So once this 5-wave completes, I'm going to anticipate that that's going to be our wave 1. We're going to come down, make a wave 2, whether it be somewhere down at the 687, the 674.50, or even all the way back down to the 657.83. That will be our wave 2, and then from there we're going to see a wave 3 that will most likely take out these highs. And as I've been saying, I believe this bull market's intact for at least another 5 years. We're going to get normal pullbacks, but for the most part, the bull market is intact. And like I said, all I'm really looking for is some digestion from the move that we've made from the April lows. So let's take a look at IWM. That got smoked on Friday. And hang on one second. Okay, so on IWM, you can see that we have the 200-day moving average, and again, this is a 4-hour chart that's sitting right at this 276.15. So I would anticipate that we're going to see some buyers step in. If not, then we're going to be looking at IWM coming all the way down to the 270.73. Again, the proper retracement for this move from the April would be anywhere down to the 263.50, the 257.35, and then all the way down at the 249.22. If we take a look at it at an hour chart and take a look and see if we saw any selling, what we're looking at here is, we saw no buying on this way down here. This is a great buy entry here, but you can see there's been selling. But the main thing is that there's really no high volume reversal bars. So once we get that, that's where I believe we're going to start the retracement that's going to take IWM down into the 260s. But from this pivot right here to this high here, you can see that we're running right into our primary accumulation. If that gets taken out, then we got to keep an eye on this 274.36. Again, right now we were definitely overbought here, but we're not really. The heavy indicator is not really into deep oversold levels. So, I wouldn't be surprised to see some more selling. But I'm going into tomorrow 100% open-minded. I'm going to let the markets tell us what to do, but I'm definitely going to have a little bit more of a bias on the short side, except for looking for that bounce to come up and possibly close this gap up at the 284 level. So I'm willing to look both ways on this. If we come down, I'll be watching support levels. If we come up, then I'm going to start watching for the resistance and really just take the trades from whatever the indicators are telling us. So with that, enjoy the rest of your weekend, and I will talk to you guys in the morning.